Hello everybody and welcome. My name is Michael Steed and I'm the new AAT President. So we're going to be doing a reaction to the budget in two parts. The first is this one, just me alone and talking to camera, and then we're going to solicit your views as members because you are the experts on the ground. Let's start with that big number, £40 billion. It's almost inconceivable. I cannot comprehend 1 billion, let alone 40 billion. So what I want to do now is to have a look at some of the detail in that budget as to what makes up that 40 billion. So I'm going to be looking at both income tax and national insurance issues. So let's start off with income tax. So no changes to the threshold. We've got a freeze there. That freeze is going to continue for a few years, although Rachel Reeves has said that she'll start to index link it from about April 28 onwards. The bans are unaffected. Dividend rates not changed. That's something that's going to be quite important to us because quite a lot of our AAT members are going to be acting for small businesses. SME sector is really what we do, and they're going to ask about extracting money from their companies, and so dividend rates are going to be to the fore. We'll weave that in as we go through. On that point, the dividend nil rate band has been kept at £500. Okay, so the big one, the single biggest element of that 40 billion is about 25 that's going to be raised from the employer's national insurance from 13.8% to 15%. And that's going to happen from April next. So it's not going to happen immediately. Just to put it in perspective, there are no changes to employee national insurance rates or thresholds. They were changed earlier this year. So the Chancellor has chosen not to revisit those. It's just the employer's bit. She's also reduced the secondary threshold. Remember, the secondary threshold is the number at which employers start to pay that. So it's been 9,100 for a couple of years now, and that is being lowered to £5,000. So you're being squeezed from both ends. So the 9.1 is going down to 5, and then you'll be paying at 15% as an employer, right the way up to the sky above £5,000. But there is some good news in that, because the Chancellor also announced changes to what's known as the employment allowance. Now remember, that's a holiday during a tax year for employers. It's not there to help employees. Now that's been 5,000, and she's going to increase that to 10,500. And the good news is that there was a threshold, there was a sort of a break on it, that only if you had contributions of less than 100,000 in the year before, would you be in a position by which you could have it. That's being removed. So it means all eligible companies are going to be able to use this employment allowance. That's really quite important. You've got to be an eligible company. Now, AAT members will act for a lot of the contractor companies. It's not meant for them. But it will help a lot of husband and wife businesses, CP businesses that we act for. So that's going to be some good news. The numbers from the Chancellor suggest that some 865,000 businesses are going to benefit from that measure. So that's something I think to hold on to. But let's move on to the national living wage and the national minimum wage. But there are increases, and some of those are inflation busting. And I think it's hard not to say that the national living wage is a very good thing. It gives people dignity in work. It gives them something that they can, they can work toward to move on from. But it is a backstop, and it's a good backstop. But having said that, there is a downside. It adds to the cost of employment. And I know that some of our businesses are going to be worried, especially in the retail, hospitality and leisure industry, where you get a lot of people on these lower salaries. They're the ones that are going to be suddenly uplifted. Good news for them, but a word of caution from the employers. So if you say had a pub, we'll move on to a pub in just a few minutes there, with a couple of part-time workers, 25 hours a week. That is a reasonable increase. Another thing that was announced in the budget, which is going to be of great interest to our members, is going to be business rates reform. Chancellor has announced some assistance for the three sectors that really feel it, which is retail, hospitality and leisure. And that's going to come in from 2026-27 with lower business rate multipliers. But she's also announced in 25-26 nearly £2 billion of extra support by freezing the business multiplier and providing up to 40% relief for those sectors, retail, hospitality and leisure, with an up to £110,000 cash cap. And a business discussion paper has been launched by the Chancellor to get into that part of the landscape. As far as corporation tax is concerned, no real changes there. We've still got the 25% main rate, the 19% small profits rate, marginal in between that. Full expensing is still there. The £1 million AIA is there. So there is some good news there. And the R&D relief rates are also the same, so that's good. There are no real changes to capital allowances either. There's just a couple of extensions of the green allowances, the 100% first year allowances on things like charging points at employers' premises. So that's good news for employers too. As far as benefits in kind are concerned, company car rates are creeping up, even for electric vehicles and other zero-emission cars. So the Chancellor has announced an increase by 2% per annum from 2028-29 and further on in 2029-30. And that'll be then capped at 9%, at least under the current rules. So what does that mean? It means that it's still beneficial to have electric vehicles, and a lot of people will be looking at an electric vehicle through salary sacrifice schemes. So I think they're slightly less attractive as time goes on, but they are still there and something to take notice of. In terms of benefits overall, the Chancellor has already announced, but I think worth re-emphasising, that the whole of the P11D process is going to drift away from us because we're going to have mandatory payrolling of benefits from April 26 in all but a couple of areas, employee loans and accommodation. So the whole of that year-end reporting process is going to substantially change. There are going to be new compliance loads in year to replace that. Another announcement, perhaps not too well received here, would be that dual cab pickups, double cab pickups, they are going to be treated as cars for benefits in kind from the 6th of April 2025. So there's definitely an increased loading on that, and that's going to be unwelcome because they are very popular vehicles. Capital gains tax, the heat's on and it's happening now. This is not one of these that happens next year. It happens for disposals on or after the 30th of October. That is budget day itself. The lower rate's going to increase to 18. The higher rate is going to increase to 24%. Business asset disposal relief is also changing. That's been very generous over the years, and that's going to increase to 14% from 2025 and then up to 18% from April 2026. As far as inheritance tax is concerned, freezing of the thresholds there, and there's also a move to tax unused pension pots on death, which at the moment have a very beneficial tax thing. And if you're in farming or in business, then agricultural property relief and business property relief, which is well beyond farming, they are going to be limited as well. You're going to get a £1 million allowance at 100%, and then it's going to fall to 50%. As far as the taxation of non-domiciled individuals, that's been around for some time. The government has confirmed that they will be changing the res non-dom system. So if you're an AAT member or a business and you've got interests abroad or clients abroad who are thinking of bringing money into the UK, coming to live in the UK, they're going to need to know about that new 4-year window. And after that, stuff that they bring into the UK is going to be taxed. We've also had announcements about furnished holiday lets, so just remind yourself about those, that whole regime, which is incredibly beneficial, is going to go from April 2025, and there are going to be some changes on stamp duty land tax as well from today, the 31st of October, and that's going to increase the surcharge on second homes. That's going from 2% to 5% extra. As far as VAT is concerned, 20% on private school fees, and that's going to hit some people quite hard. The question is, how elastic is that demand for school places in the private sector? Time will tell. As far as levy is concerned, fuel duty has been frozen. We didn't quite expect that, but it did happen. And also alcohol duty. So in pubs, coming back to pubs in just a second, that's also going to be quite a good thing. About a penny a pint off. So now let's move on and just think for a little bit about a classic AAT licensed accountant thinking about or acting for a husband and wife running a pub. What are the stresses and strains that come out of this budget for them? So increased costs of employing people. But there is some relief on the employment allowance. We've got a little bit of a drop in alcohol duty. But if they want to sell their business in a year or two, business asset disposal relief rates are going to rise. So they are going to feel under pressure. Just pulling back the focus of the camera and just getting the wider landscape. And there's a lot going on here and a lot for AAT members and their businesses to absorb. Now, in pulling the things together, we've got stuff on the apprentice levy, which is transforming. We've got some stuff on the tax profession being regulated, because we have a very small minority of people that are not members of professional bodies giving poor advice. A lot of them do, but that is an issue, and we'll be taking that forward. But the last one, I think, to wrap up on, is just to recognise again the tensions between the cost of employing people, all the costs that go with that. We'd love to employ more people in our businesses, but the cost can be prohibitive, and it's something that we need to be very mindful of. Okay, well, I think that's it. That's a wrap from me. It's always a pleasure to interact with AAT members. That's going to happen a lot. I'm going to be doing a lot of tax and talking to you throughout my year in my presidency. So I'm very much looking forward to interacting with you. So cheerio now.